a client that is purchasing a home has to qualify for what is called the stress test, and that is based on if they're putting down, the client is putting down a less than 20% down payment. So with that stress test, that interest rate that the client has to qualify is higher than where the interest rates are today. So it doesn't mean that the client is getting that higher interest rate on a stress test. It means that the client has to qualify for the stress test interest rate, so that the lender has security that the client will be able to afford the home if housing prices not only increase, but interest rates increase by the time they come up for renewal. So with that stress test, as in today's market, that interest rate is 4.64. So it is considerably higher. It's about 2% higher than where interest rates are today. So it will reduce, with some clients, what they qualify for a purchase price. And again, why the government is putting this in place is just to make sure that the market and the consumer is healthy, that they're able to afford home ownership, that they're not going to be mortgage poor, and still be able to afford all the costs of owning a home as well too. It will affect the most first-time home buyers. Definitely, I've seen it, especially in the last month, for first-time home buyers coming in to get pre-approved with me, especially in my market in Kitchener-Waterloo. We're seeing about a $50,000 reduction in what the client can afford for a purchase price. So it has been significant. It would be a lot more significant in some of the major, central areas like Toronto and Vancouver. You'll see a higher difference in what they can qualify for. It's there for a reason. It's to make sure that the first-time home buyer can afford the property, and not only just the mortgage payment, but property taxes, heat and hydro, everything that encompasses owning a home. The government wants to ensure that the client can, the homeowner can afford it.